Good morning to all traders and welcome to today's market insights video on the indices. It is the 29th of June, it is Monday, and we'll have a very interesting week ahead. We are expecting, of course, another monthly NFP. What I will be looking for this week as well is the lawmakers that they are meeting in China to discuss the implementation of the Hong Kong law. And that is likely to increase tensions between the US and China as well. So I will be looking for any headlines on that front as well. Since it's Monday today, I want to talk about the S&P and as well as the US index. Last week, actually, the S&P lost a bit of its gains. We've had the infections in the US rising. Actually, they doubled over the past 2 weeks, which is a very worrisome piece of information if we take into consideration that, well, the idea was that the economy would bounce back as the consumer restrictions were eased, but that was not the case. We see the restrictions being applied again. At the same time, if we look at the statistics, we actually got to over 500,000 deaths. Now, on the S&P, I want to remind you where we were last week. We're talking about this W, X, and Y. Actually, it's not just last week. We've been looking at this pattern for a while now. W, X, and Y, and we're looking for another of the same. Now, we've had waves A here. 1 second, let me just go a little bit closer. So down here, wave A was finished, right? And then, well, because obviously this move down here looks very corrective, it's got to be part of this ABC correction, okay? Now, the truth is that this is a complex combination over here. So we are expecting, we've seen 1, 2, 3, 4, and 5. Either we're going to turn with another 5-move wave to the upside to take out the 3170, which is the 78.6 Fibonacci of this wave down here. This is wave A, because wave A did not actually reach that. We missed it. Or, I mean, we could literally go to 31.99 as well. 32, let's say, the 88.6, or anywhere up to the 32.30. Or the other case is that, well, we're going to see another short move to the downside to take out the 29.86, which is the Fibonacci retracement of wave A, and then start moving higher, right, once we finish wave B. Now, we do get an RSI signal over here that supports, at least in the short term, the upside. But do not forget that intraday, we could get a fresh low, weekly low, I would say. Yeah, 15th of July, 2-week low before we move up. The other scenario, of course, as you very well know, because we discussed it many times, is that this is correction. This correction ended down here, and this is an impulsive move to the upside, which means that this is 1, 2, this is part of wave 3, and then we're going to see a fresh high above the 3400s, whatever that level was. Obviously, we need to first break above wave A, then move up to the previous high in order to consider this correction pattern, this corrective pattern that we see now as an impulsive one, okay? Now, on the index, again, well, we talked about this wave down here being either wave 1 or wave A, okay? And we're expecting now wave 2 or wave B to complete. Last week we were looking at this being A because we're actually trading down here, but with new fresh high over here and then a double bottom down and a move to the upside that missed the previous high. We're looking at this as a leading triangle with wave A being completed at 97.75. We've had an ABC for wave B, also a double bottom with wave 4, a very good indication of further upside if you ask me. And then 1, 2, 3, and then 4 looks to me like it's going to be an expanded flat. Why I say that is because we see a very nice bearish signal on the RSI. okay? And since, I mean, well, this move to the upside over here is that 123.6 Fibonacci extension of this wave over here. We've got ABC, ABC, and 1, 2. We are in the midst of wave 3. We're going to probably see wave 3 breaking the previous low of 97.25, then retest back to that level and have another fifth wave down to 97.04. 97 would be a nice, very nice round level as well. And then we can start looking for prices to move higher. Now, the Fibonacci extension of waves A and B, okay, so if we pull that over here, you can see the 61 was already done, okay? So that's why I'm not looking at the 61 any longer. I'm looking at the 78.6. And that brings us to around the 97, 99. Let's just call it 98, okay? And then the 100 Fibonacci extension is 98.43. But if this is going to be a zigzag, zigzags usually end at 78.6. So with that said, the truth is that anywhere above 97.75 and up to 98.43, this is where we could see prices start sliding lower again for either, well, depending on whether it's 1 and 2, it's going to be wave 3, yeah, or it's going to be wave C, okay? Now, what else we need to take into consideration here is that the 38.2 Fibonacci extension comes to around 98.49, right? And this is well below the 99 wave 1, okay? So we could literally move up to that level, 99, before we move lower, okay? So, I mean, I know it's a big range from the previous high to 99, but, well, anyway here we can get the signal. And this signal potentially could come after a move to the upside on the RSI. We would potentially be looking for another opposing signal over here, but with the same bias, right? So that would be divergence, a hidden divergence, and prices would actually move something like that, okay? So this would be all for the day. Thank you for watching, and I will see you again tomorrow.